Welcome back to the Money and Wealth Show. In conversation with Garth Turner, I'm Sterling Fox. Now, Garth, we were talking about the tax-free savings account just a few moments ago. Another really popular with the general population tax program has been this home tax credit for renovations, etc., that people have, well, really warmed up to. And the government has decided not to carry it forward in the new budget. Why do you think that is? It's a vote grabber. Why wouldn't they stick with it?
Well, it costs money. Obviously, the government is foregoing some tax revenue, $1,500 per family that uses it for the maximum amount of renovation. So that's going to cost a few $100 million bucks, and you know the government's going into debt like by the moment. Okay, this is serious
The
stuff.
debt clock is a scary thing.
Yeah, it is. So that's one reason. But secondly, when you encourage people to renovate, it's good, but you're kind of pulling business from the future. Anytime the government gives you money to do something, it is seeking to alter behavior. They may give you money to buy a car like they did in the US, clunkers for cash, or cash for clunkers. They may give you money to renovate your basement, so you're altering behavior. You're going to do something you wouldn't necessarily otherwise do. That is drawing business from the future. The problem we've got right now, because the economy right now is on drugs, okay? It's on government drugs. We talked about this a month ago. It's still there. So as we're on drugs, we're modifying our behavior and all the activity we're bringing for the next year or two. The problem is when the drugs end, it's going to go whack, okay? So they've got to ease these programs off. They've got to wean us off all of this stuff. And that's what the budget did that we just saw with Mr. Flaherty. Okay, he's starting to say we have to have restraint, we've got this big deficit, we've got to pay it down, and the country cannot afford these kind of programs. What he's really saying is you guys got to start spending out of your own pocket. Don't expect us, the government, to do it.
But he's still pushing the drugs out the other door. He's talking about restraint and pulling in our belts and all of this sort of conservative talk. But at the same time, there's still billions in stimulus cash flowing into the marketplace.
Yeah, there is, Sterling. And that's going to continue for a while. The economy is weak. And you know what I say to people in my talks, and I'm going to say it again to people in Kelowna coming up at the next Money Show, you have to be careful because this, in many ways, is a false economy. If you have government in there and the economy's expanding, but jobs aren't being created, watch out behind it, okay? Because don't get too ambitious. Still be cautious because I think the economy is false.
Now, the Money Show that Garth was referring to in Kelowna comes up on Saturday, the 13th of March, and Garth and a number of speakers will be there. And of course, you're invited if you live in anywhere within driving range of the show. It'd be a worthwhile Saturday spent. Garth, back to the budget and back to the whole issue of government restraint. The Harper crowd sees this as their destiny. He's a pretty conservative guy, and yet in his time as Prime Minister, he and his government have spent like drunken sailors.
Yeah, well, that's true. Mr. Harper, and I know the guy. Mr. Harper is, he's a talented politician. He's out to maintain his grasp of power, and he's understood clearly what the economy needed right now was a jolt. And that has run counter to what he said in the past, that I'll never go into deficit.
Right.
You know, we're never going to have a recession. Forget it, we're not the U.S. Well, we actually ended up with all the problems that the United States had, pretty much, real estate to come. So I think Mr. Harper knows what he has to do. But at the end of the day, he does not want to be the Prime Minister with a legacy of leaving the country with a $50 or $60 billion deficit and a $600 billion debt. He does not want that on his record. So I think what you'll see over the next couple of years is if he's still in power and if he's elected in the next election, you will see a very significant restraint program. And Canadians better get used to this. We are going to see higher taxes and less spending.
And we saw this during the Paul Martin era too, Garth.
Absolutely.
But at that time, the Martin government was able to pull in the spending basically on the backs of the provinces because a lot of the money that they cut back on releasing into the economy were grants to provinces. So ultimately, individuals, regardless of their provincial address, were shortchanged by a reduced amount of provincial services and ability to provide.
Well, there's no other way around it, Sterling. You either raise taxes or cut spending. And the GST, remember, Paul Martin had that. He inherited it. We've still got the GST. I think it's going to go up again. I think it's going back from 5 to 6 or 7%. I don't think, and it maybe the government might say, you know what, Sterling, this is just temporary. Don't worry about it. Okay?
Right.
All right, just gotta
Income tax was just temporary.
Yeah, don't worry about it.
Back to World War I.
But I think we are going to see the GST go up, and I think you're going to see a bunch of other taxes too. But spending will go down, and it's not going to be easy because every government in the province is in deficit. Here in BC, we just had the post-Olympic budget, more deficits, Alberta deficits, Ontario. So, it's not going to be easy. You are going to see cutbacks at every level of government. This is going to mean higher property taxes, higher provincial, and higher federal.
City of Toronto is a good example, Garth.
Yeah.
The way that the nickel and diming of the individual taxpayer.
Oh, absolutely.
They call them fees, they call them levies, they call them anything but taxes. But all of a sudden, basically every time you turn around in Toronto, you're paying another tax in the form of a fee for a service that you've been accustomed all your life to receiving for nothing.
Well, exactly. Now there's an automobile tax. There's double the land transfer tax, and if you have more than your allotted garbage bags, you're taxed on that. But that's an example of where big cities are going to have to go. And after this Olympic thing here in Vancouver, I'll tell you, I think Vancouverites and people in BC are going to get a taste of what all this means.
Well, we'll find out exactly what's in store for Canada's westernmost province from Mr. Garth Turner, who has some strong thoughts on the future of British Columbia and the rest of Canada. Back with lots more on the Money and Wealth Show in a moment.
Good afternoon. My name is Larry Ray. I'm the President and CEO of Gold Ray Resources Corp., a company that trades on the TSX Venture Exchange and has the majority of its operations in China. We are currently developing a resource there with limited production at this time. Our goal is to increase this production up to about 1,200 to 1,500 tons per day. And to do that, we are negotiating with several Chinese companies, one of which will become our partner either directly into the company or into the project, which will allow us to move the project up to the desired tonnage. For further information, please visit our website at goldray.com or phone 604-531-9639.